Okay, let's begin today's session. So this week has been a very exciting week. We almost have earnings every day, and sometimes there are like two or three earnings in a day, lah. Okay, especially on Thursday we have Shark Ninja in the morning, and then after market it was Dropbox and Keymo. We have three earnings in one single day. So it is a very volatile week because of our earnings lah, okay, but nonetheless the overall market kind of like a little bit jittery lah, okay. If you look at the weekly, right, weekly candle, it kind of closed in quite a red candle, but on Friday there was a sudden recovery coming back in towards the end of the session lah, okay. You can see sometime around 1 a.m. like that, there was a sudden recovery that came in. And if you look at Russell 2000 also, initially it was down about 2%, if I'm not wrong. It was actually down from the closing, it was down as much as 1.7%. And then after that, it closed about 0.5%. Okay. So this is like a mass market recovery. Almost everything you see kind of rally back up. For example, you can see Chemo initially down about 7% like that, but now it ended up closing at 6% like that. And same thing for Exometry also. Initially it was quite negative, but ended up plus 4.5%. Even Toast, it was down quite a bit, but it closed in the green. Shark Ninja also. So it seems like indiscriminated recovery that coming in, okay. And those that didn't really do well uh are very minority lah, okay. Majority of the stock kind of recover, and you can see that initially VIX was also quite high at about 22, but after that it closed in the rate around 19 like that lah. And the yields were quite flat though for all the recovery that's happening, right? The yield is basically flat, so we can't really tell what is going on from the bond market, lah, okay? And also, the US dollar kind of like came back down a bit. Big Bitcoin is dropping over the weekend. Overall, nothing really much going on, lah, okay? I can't really find any news regarding the last minute recovery for the week. Maybe they are starting the window dressing early. Who knows, lah, okay? Who knows? But anyway, the ISM reports are out. So this is ISM manufacturing coming in at 48.7%. So it is still below 50 lah, okay? And it kind of declined a little bit further down, negative 0.4 like that. Not really a lot of improvement here. Also, new order up a bit, but production level down, employment level up a bit. Okay, so nothing really much happening on the manufacturing side. It has been in the contraction state for quite some time really. Okay, and you can also see certain commodity are up in prices. Aluminum, copper products. So maybe if you are looking to play any kind of commodity related trades, right? These are something that might worth looking at. Okay, in fact, if you look at Century Aluminum, right? Where is it? Century Aluminum. Watch list. So hard to find stuff. Century Aluminum is up about 14% on Friday itself. Like it was quite a crazy move. I'm not sure how Alcoa is doing. Let's check how Alcoa only up about 1.69. Maybe we can consider re-entering this again. Who knows lah? Okay, who knows? But overall, the manufacturing sector is still very sensitive to tariff lah. Okay, so a few comments that I'm seeing is chemical product. One wonder has turned to concern regarding how the tariff threats are affecting our business. Order are down across most division, and we lower our financial expectation. The other one is machinery tariff trade war is negatively impacted agriculture export market, driving down demand and price. This negatively impact farmer revenue and likelihood of farmers investing in new equipment. So I think this is one area that maybe we can look for a short position. Farming machinery. There's another machinery comment here also. tariff continue to be a large impact to our business. Products we import are not really manufactured in US, so attempt to reshore have been unsuccessful. Overall price on all products have gone up significantly. We are trying to keep up with the wild fluctuation and pass along what cost we can to our consumers. Okay, so perhaps in the manufacturing side things are not looking that great lah. Okay, but going on to the service side is actually a whole new different world in the service sector. Service PMI is at 52.4, so it kind of went up quite a bit. Previously, it was right on the dot at 50. Then it went up by 2.4 points, but if you can see the business activity is going up plus 4.4 points. New orders spike about 5 points like that, and employment going up about 1 points. Supplier delivery are going down, meaning to say that there's some demand side constraint. Okay, sorry, supply side constraint. People are consuming services faster than what the service provider can deliver. Okay, and backlog of order also gone down substantially. It means in this case, I would think that it's saying there is a sudden demand coming back into the service sector, and now the backlogs are depleting at a very very fast rate. Okay, so service sector is still doing very very well. And some of the comments are very positive. Also, like retail trade business is very strong. No supply chain or logistical issue. Transportation and warehousing, general business has been steady with minimum fluctuation. And wholesale trade. So this is something that maybe we may want to focus a little bit. Business seems to be picking up. Multifamily is a big driver. I think most projects that have been postponed are finally coming to fruition as lumber prices have found a bottom. The outlook is better with Fed plans to continue with rate cuts. Home prices coupled with elevated interest rate continue to keep a lid on sales. Home affordability is still a bit out of reach for a large portion of potential buyers, but nonetheless, right, it is a very positive comment lah. Okay, if lumber prices are finding a bottom already, right, then maybe overall in the housing area things might start to improve lah. Okay, so when the housing sector start to improve, right, it can have a spillover effect where the furniture company will start to improve also. Then other companies that are somewhat related to housing, like for example gardening products, or furniture products, home appliances product, things like Shark Ninja, they may have some spillover effect from the overall housing sector improving. Okay, and then in mining, relatively flat. uh Finance insurance activity is generally flat month over month, blah blah blah. Okay, so overall, as you can see here, the service sector is still doing well lah. Okay, so I don't think there will be any kind of like a very bad recession or whatever nonsense that may happen to the market. Okay, so anyway, for today, right, I want to focus a little bit on portfolio management, and I think this portion of the portfolio management is very important now. Okay, I have not covered this before, but I think it's something that I should cover a bit, and it can give you a little bit more insight into why certain trades are being taken out, why certain trades are being added in. Because when you are trading professionally, you need to at look at trades from a different angle. You need to look at it from a portfolio level, not just individual trades. Okay, sometimes when we cut trades, we are not cutting because the trade is bad or the trade not going good. It's nothing to do with the trade itself, but rather at a portfolio level we need to do something, and sometimes certain trades can get added or get cut simply because the portfolio demands it lah. The portfolio needs a certain level of hedging lah. Okay, it can be because within a certain month we are facing a lot of risk, or it can be that we are simply too overexposed into the long or short or call or a put option side, and we need to add some hedging, that kind of stuff lah. Okay, so I will be going a little bit more in depth into managing portfolio, but from a option perspective. So do try to pay attention and do try to follow lah. Okay, especially if you are just blindly following trade without any regards for your own portfolio like that. So now let's just go through the portfolio update first. A lot of stuff happened. Firstly, Duolingo, there was a cut last week. Then there was another cut this week. which was $5,000. So I no longer hold any Duolingo. Okay, it was already when it dropped 24%, right? The option was like almost a lot of the values are gone lah. So there was another $5,000 loss on Duolingo, and Dutch Bro also cut about $2,300 loss, and Shark Ninja I taken profit about $4,000 in profit, and Dropbox, unfortunately, yesterday it was being cut off at $31 lah. Okay, so for this week, if I highlight all the trade, right, is overall portfolio down about $6,750 lah. Okay, on the close position. So you can see the portfolio now down to 98,000. Initially it was like 104,000 like that, but now it's below 100,000 already. So currently sitting at around 92.95%. Basically flat lah. Okay, if you are looking at here, it's basically flat, all the close position. And let's go on to the open position a bit. So open position, you can see it has improved massively, and that is all coming from axometry lah. Okay, axometry up about 28%, and in fact on Thursday and Friday itself, it went up even more. You can see on Friday went up 4.5%, and after the earning, it has still been going up. Okay, so from this closing price to here, right, is up about 23%. So you can see that my overall axometry position all the way up to $34,000. But unfortunately, there was a cover call here at strike 55. So you can see even though the current share price is at 64, right? I'm not really getting the full benefit out of it. In fact, my profit has been capped at $55. Okay, whatever that is happening here, right? I'm not really capturing the profit, which is the reason why on the day that sorry on the day that axometry earnings came out, I actually added a brand new position, which I mentioned on Discord. Wait, where's axometry? Axometry. So when I update a position, right, it will be here for about 5 days. But after 5 days, it will be gone, and then I have to go and dig. So when you see any update coming up here, right, make sure you are paying attention, okay? If not, it will be just gone, suddenly disappear. All these are uh Dutch Bro, Intel, Shark Ninja, Toast. Okay, maybe a little bit back. Here. Okay, so I actually added another position here with January call at $65 and December short at January call at strike 60 and December short at strike 65. Okay, so try to pay attention to here when earnings are coming out. So when I added the position when market open, right, it sort of allowed me to capture a bit of the run up that it happens beyond $55. Okay, so I have another axometry position here, which is what I'm referring to, but you can see that the profit is really not a lot lah. Okay, it's about 3,200 because this is quite a small position, and I was a little bit reluctant also, mainly because overall the market was a little bit red, a little bit jittery lah. Okay, I'm not that comfortable adding a very very big position also, and at the same time, right, Axometry is the first earning that actually came out. It came out on the 4th. Okay, it came out on the 4th, which is, I believe, is a Tuesday. Yeah, it's a Tuesday. So I don't want to end up in a position where I enter a very, very big position, and then after that, it kind of retrace all the way back down. And then after that, I have all the other bunch of earning that is coming up that maybe I may not able to take the risk lah. So there are a lot of factors in play on how I took this additional position, and the portfolio itself is a very big factor, and the fact that I have Dutch Bro, Duolingo, Toast, Shark Ninja, Kimo, like additional 6 more earnings coming up within the same week, right? I am not that like not that risk taking enough to enter another big position that I used to take lah. Okay, but nonetheless, I mean, I still get a little bit of consolation price, which is 3,000 $3,000 lah. Okay, but I also want to sort of highlight to you that cover call are not always good, and this is the reason why, because now the cover call is eating 13,000. So the long position itself, I have the stock position itself is in profit about $36,000, but it get cut down all the way to like 20,000 like that. You may think 20,000 is a lot, but I would definitely prefer 34,000. Okay, and if the cover call is not there, right, definitely I would have gotten this $34,000. So if you are hearing nonsensical stuff like, oh, I'm selling covered call for free income, for passive income, free premium, those are nonsense. Nothing is free. There is some risk involved, lah. Okay. And another reason is also you can see Chemo here taking a shitload of damage here. And the fact that axometry go up and the fact that the cover call is eating so much of the profit, right? It kind of hurts me a little bit also, lah, okay? Hurts the portfolio a little bit. But nonetheless, right, you can see the floating PNL actually recovered quite a bit. Previously we were down about $50,000, but because of axometry, right, currently is now sitting at negative $38,000, okay. And also talking about Chemo actually did the recovery was quite strong from all the way from negative 8% to now positive 6.5%, right? And if this uptrend or recovery reversal can continue, right, then I may be able to meaningfully cut down the loss here, okay. So unlike previous week, due to axometry profit, I'm not really facing like a very tough uphill battle really. And if you look back at previous webinar, right, axometry position have always been there, okay. I only added a little bit of small position this week. So sometimes you really need to sort of pay attention to what is going on also lah. Like, let's say you don't have axometry and then you end up losing everything else, right? Then this week is going to be a very bad week for you. But for my case, this week is actually not bad because we ended with a very bullish signal coming in at the end of Friday. Axometry cover about 10,000, 20,000 worth of position in my floating PNL. Okay, so now this seems like something that is recoverable. And then I've entered Toast. Toast is relatively a small position also. You can see the profit is not so much. TLT actually went down quite a bit, so we are losing a little bit from TLT lah, okay. But nonetheless, right, it is still like sort of hanging around there. Haven't break the support level yet. And because our strike price is at 92, right, it's actually a calendar. It's actually a calendar. So before the November expiration, right, as long as it is below 92, we are doing fine now. Okay, maybe next week it kind of recover back a bit, it kind of hang around there a bit, and then after November expiration, then it rally, right? Then TLT may go into our direction now. Okay, but nonetheless, it is currently taking a little bit of damage here. So IWM initially it was in a very good profit. It was somewhere around 236, which is in the money already, but it recovered back all the way up to 241. But that is fine. That is actually fine. I don't mind holding on to continue to hold on to IWM because this is the only true bearish position that we have on our portfolio. There's nothing else here that is really considered bearish lah. Okay, aside from VIX and aside from maybe perhaps TLT. But TLT is not really bearish. Also, it doesn't really care about the stock market. It is the bond market, and sometimes market can go down and your TLT also go down, which is very very possible lah, okay, and end up you may end up losing in both trades lah, okay. So TLT is not something that we can 100% rely on for bearish trade. It has some discretionary stuff that you need to take note of lah, okay. Lulu not really gonna cover much about it. Chemo, as I mentioned, covered already, so hopefully it can continue to go up in the next week, and highly likely that this protective put may this protective put may expire with nothing, meaning we are going to lose money on the protective put, but that will also mean that the stock position is actually recovering. Okay, and you can see there's a cover call here at strike 16 also, which I believe we should be able to get, because if you look at Chemo, 16 is like so far away, it's like 32% up. Sorry, it's about 28% up, is very very far away lah. Okay, so I don't think it can cross 16. If it is able to cross 16, then it will mean that my chemo is back to 16 and I will recover majority of my portfolio lah. Okay, so you can see here, this is very much what I would like. So I don't really mind chemo going up all the way to 16 and then the cover call away my stop position lah. Okay, which I'm perfectly fine with. It will repair my entire portfolio lah. Okay, but at the same time, until the end of November, right? If chemo continue to go down, I would think that the put option can still help protect a bit lah. Okay, so for now I will continue to hold on to chemo and I'll see what I can continue to do with this particular situation lah. Okay, to be honest, if it continue to rally and then if we get very close to $16 right by expiration, and once November expiration is over, I'm not really that keen on adding any more covered calls because I don't want it to end up like axometry like that if things are improving. Okay, so this is all I have for my open position, but there's something else that I want to sort of cover, and this is something that I do, but I don't really share. I do it at the back end, but right now I think I should share a little bit also lah, so you have some kind of insight into what is going on. But if you are doing your own thing, if you are not in a full option portfolio like what I'm doing, right? Maybe it might not be applicable to you, okay? So there's actually a new tab added here called expiration risk. And if you when you look at this, right, what you can see here is that um I have grouped all the options based on the expiration. So you can see all the November are expiring here, and then all the December are expiring here, and all the January one are expiring here. Then I also added the axometry stock position. Okay, this is a stock position. But one thing is missing from here is that I didn't add the chemo position because this two chemo option is basically a hedging collar. Okay, it's a collar hedging on the stock position itself. So it may distort what we are seeing here. Okay, so I didn't really add it. The option position need to stand on its own. So since those two options are mainly to hedge the stock position, right? I didn't really want to add it. Okay, it will not serve any purpose in terms of option portfolio management. And VIX is also not there because we don't really need to care about VIX. Okay, it's just sitting there, and Lulu is not there also mainly because it's all the way in May next year May lah. Okay, so I'm not gonna put Lulu there. So these are all the options that is gonna expire on the corresponding month. Okay, November, December, and January. So you can see certain trades that are paired together, they are being separated also. For example, TLT is expiring in TLT short leg. So all the negative are the shorts, all the short leg, okay? All the positive one are the long legs. So you can see TLT short leg is expiring in November, but the TLT long leg is in December. And you can also see Toast short leg is in November and Toast long leg is all the way in January. And axometry, the cover call is here, and the stock position is here. So I actually included cover call to sort of show you something also, but we just go through this first, okay? And we have the other axometry position. The short leg is in December, and then the long leg is in January, okay? And then IWM is actually it's a vertical. So both the long leg and short leg are expiring in December itself. So now you can see that in November, right, all the expiration are actually short legs, okay? All the expiration are short legs, meaning to say the long leg is somewhere else, okay? The long leg is either in December or January, or the long leg is actually a stock position, which is axometry, okay? Meaning to say what we are gonna get in November expiration is all the credits, okay? We are gonna get all the credits. And you can see here, Toast is currently about $570 in credit ready, but the maximum credit I can get is $930, okay? So TLT maximum credit I can get is $3,320. Axometry maximum credit I can get is negative $6,000. So in a way, for November, all I'm going to get is all the credit. And if I highlight all the three cells, right, you can what? You can see here, I'm going to get about $10,000 worth of credit, okay? So now, if I am getting credit in all these call options, right, it will also mean that I'm gonna lose money somewhere else, lah. Meaning to say the long leg are not doing well, okay? Which is the reason why all these short legs are getting profit. But we will worry about that later. But let's say if the stocks goes in your direction, right? If all these trades goes in your direction and you start losing money on all your short legs, right? That is perfectly fine. That is perfectly fine. And the reason is because if you are losing money, if you are losing a significant amount of money on your short leg, it will mean that your long leg are doing extremely well and they were more than enough to cover for all your short legs lah. Okay, so for example, you can see here if my TLT short leg is losing money, it would mean that my TLT long leg is actually making a lot of money. And the reason is because the TLT long leg have 80 contracts, while the short leg only have 40 contracts. So if TLT continue to go up, right, the long leg is going to get more profit than what your short leg is losing. Okay, so this is actually what we call ratio calendar, and you will realize that I do a lot of ratio calendars. Okay, same thing for toes also. You can see toes. If the short leg is going to lose money, that means the long leg is doing very well. And in this case, the toes long leg is all the way in January next year. It has 20 contracts, while the short leg only have 10 contracts. So if the best case scenario here is the stock remain flat, or maybe it can go down slightly, and then we get all the premium here. And then after that, once the November expiration is over, right, then the long leg can start to gain money lah, as the stock start to recover lah. Okay, so that's basically what I'm trying to sort of see what are my risk going into the expiration for that month. And you can also see here Axometry short leg is actually losing $13,000, but that is fine because the reason why it is losing $13,000 is mainly because the long leg is actually up $34,000. So this is perfectly fine. So when November expires, right, this and this will cancel out each other because the short leg is gonna get exercise, and when it get exercise, right, it will cancel off my long leg here. Okay, so there will be a net profit in this position. So I don't really need to care so much about it. Okay, then going forward, we go into December. And you can see here, December, we have two call option. One is a long leg, one is a short leg. And you can also see here, we have two put option. One is a short leg, one is a long leg. Okay. And if you look at the gross exposure, in December, I'll be getting $1,200 premium from Axometry, and I'll be getting IWM premium, which is the vertical premium. Okay. But the long leg, the TLT actually have $10,000 worth of value, which is currently already down about $5,000. Okay. And the IWM have about $6,000 in value, currently about $2,000 in profit. So now I want you to look at this December expiration, and look at all the options that are going to expire, the gross value that are going to expire here. And I want you to tell me whether if December is a risky month where I need to do some kind of restructuring, I need to handle my portfolio a bit, or do you think December is a very safe month? I don't need to do anything. I can just leave my portfolio as it is. I will give you like 2-3 minutes to think about it, and whoever can think of it, please write down please write down your answer. The one that can give me a correct answer, you will have your next month Patreon refunded. You'll get 1 free month. I will refund you your Patreon for that 1 month. So I repeat my question. Depending look, based on what you are seeing here, do you think my December is safe where I don't need to do anything else? Or do you think my December requires some management? I need to do something about it because it's actually quite risky. Not safe. Okay, why? Why not safe? If safe, then why also lah? 来来来 exposure is high. Need something, need more specific. Exposure high is actually not that bad, but um all on same. I mean, of course, it will be all on same day lah. Or I mean, all the option expire on the same day mah. Cannot be like option always expire on the third Friday of the month lah. I mean, a November option will expire on 21st. December option will expire on the 19th. Okay, we got one very long answer. Consider risky cause most of the short expire on November. Consider you still have toast and XMTR on January expiration. Might want to do short option for them on December as well. If price rallied to the long price, will be good to turn them into vertical. Okay, this one half correct. Okay, half correct. Half correct. I will give. Okay, please PM me your email that you use for your Patreon. I will refund you the current month, okay? I won't wait until next month. I'll just refund you the current month. But half correct, not fully correct. Not full. PM me your email. If I don't get email, I don't know who to chase. Okay, but not fully correct yet. So somebody else give you got chance. One more. I'm losing $60 for I'm gonna lose $60 this month. Not really, not really. Not safe as year-end investor will close position to go. No, I mean more. I mean yours is a very general answer. I mean no matter what kind of portfolio I have, your answer can be an answer. So that's not an answer. Something very specific to what you are seeing here. If that is the answer, then everybody might as well close off their entire portfolio. Don't trade for November and December already. But in fact, December actually is the best month to trade because there's a lot of volatility coming in, and you want to be part of the volatility, not hide from it. Okay, I count down 1 minute. If within 1 minute, no one can give the answer, then I will say the answer. But good attempts, good attempts. Very good attempts. Some of you are close. Some of you are close. 来 30 more seconds. Okay, so is it because it's long bias? Not enough short, also concentrated in tech. Okay, yeah, Hong, I will give you that one. I will give you that one. Okay. PM me your email also. PM me your email. I will give you refund for this month. So it's a bit of both. Firstly, right, you can see here in December, um you can see all the long options, right? This long put and long call. TLT long call is about $10,000 in value, and IWM long put is about $6,000 in value. And the credit that I'm getting is only about close to $3,000, okay? So if I highlight all these squares, right, you can see that the net is about $14,000. Okay, the net is about $14,000. So if in December, if all my trade goes wrong, I may end up losing $14,000. Okay, meaning to say TLT crash, IWM go up. So TLT will expire 0, and it will end up with I will end up losing about $10,000, and then IWM also goes to 0, I will end up losing $10,000. Then I will end up with a total of $14,000 loss lah, assuming I'm getting credit for this two lah. Okay, and on top of that, right, IWM is actually a bearish position. So if the market crash, then good lah. But if if December happened to be a very bullish month, which historically it has been lah, okay, most of the time, and TLT is not really that reliable as a bullish or bearish. Sometimes it can do whatever it want, okay. So if let's say in December, right, market rallies, IWM is going to lose a lot of money, and then for some reason the yields are going up, then the TLT is also going to lose money. So I'm going to lose like $16,000 here. So it is a combination of both very high exposure, but at the same time, right, it is concentrated on the bearish side. There are no bullish position here. Okay, there are no bullish position. Axometry and this axometry is actually the short leg lah. Okay, so it's not really gonna help anything. So if the market do a Santa Claus rally, right, December I'm gonna end up losing December I'm gonna end up losing $14,000. So now I need to take care of that. Okay, I need to take care of that. And how do you think I should take care of that? How do you think I should manage December? This one no free no free refund. But I do appreciate answer lah, okay? What do you think should be done to um uh ensure that December don't end up in a disaster? Thank you, Hong. I got your email already. Who's the other one? Mike. Please send me your email also. If you are a graduate, then you PM me. I never get your PM unless it's on Discord lah. Is it on Discord? Oh yeah, I saw you on Discord already. Okay, thank you. Okay, so the next question is how should I repair this? How should I prevent myself from getting into a disaster? So Mike actually give some suggestion really. Consider you still have toast and XNTR on Gen expiration. Might want to consider additional short option for them. So I can add um axometry and toast short in December, short late, and that will give me a little bit more credit, and that credit can be used to buffer whatever that I'm gonna face on December lah. Okay, so December there's a total of $14,000 loss. But the issue is that even if I put up short legs for toast and axometry in December, right, I may end up getting like only $2,000, $3,000 in terms of credit. So even with the short legs coming in for toast and axometry, right, I don't think that the credit is sufficient lah, because if I get $3,000 in credit or $4,000 in credit, I'm still at the risk of $10,000, and there's no hedging here. There's no hedging here. IWM is bearish by itself. TLT doesn't really follow the market. So if both still go against me, right, that 3-4,000 may not be sufficient to save the portfolio. Like in fact, I can still be down like $10,000 on December lah. Yeah, so I can turn TLT into vertical also. So most of what you guys are giving me is actually adding short legs, adding additional credit into December lah, okay? So if I add a TLT credit here, if I add toast credit here, if I add another axometry credit into December, right? Maybe a credit from 3 position can offset the loss a bit lah, okay? But I don't really think that the offsetting of the risk from 3 position is still sufficient. Okay, suppose I'm getting $5,000 credit from 3 position, I will still end up in a very negative. I can still end up with a $9,000 loss in December, or even uh $7,000-8,000 loss. It's very possible. Okay, so generally what I want is that I will want to reduce the risk by a significant amount. Okay, but anyway, also good answers. So you can see here, right? My IWM is currently up about $2,000 already. TLT is down about $5,000. So one thing I can do, right, is that I can simply get rid of TLT, get rid of TLT altogether. TLT currently down $5,000, but the short leg is about $3,000 up, and there's only 11 cents left from the premium. So I may as well just remove this altogether. And what that will do is that will actually remove this entire trade. Okay, it will actually remove this entire thing, and I can still get out at about $3,000 loss on TLT lah, if I look at it as an individual trade. Okay, but I'm still getting credit for December lah, because the credit is there already. So sorry for November. So I'm not really scared about November. So now once I have done that, I can still add another short leg into toast, which will give me some credit. And you can see here now, if I put in a credit for toast, right, I can sort of get the risk down to almost zero. Okay, currently right now I still have $3,000 risk. If I add toast, I can get the risk down close to zero. But there is another aspect to it, and that is December is a very bearish portfolio. In my current portfolio, there's only put option here, and the call option is actually a short leg. So if I want to make any kind of substantial money, right, I need to be able to make money either way, be it market go up or market go down. But in this case, for December, I'm not really going to make a lot of money when market go up. But yes, maybe toast and axometry might go up, but those are in January lah. Okay, we will worry about January later. But December, I may not make any money when market actually go up. So there is no long short here in December. There's only long. There's only bearish position. There's no bullish position. So another action that I believe I can take is actually I need to add some kind of a bullish position into November. Okay, I can actually add, sorry, I can add another bullish position into December. And if I add a bullish position into December, if I add a bullish position into December, yes, I may be increasing the risk by a little bit, but now I am properly long short hedge ready, delta hedge ready, regardless market up or down, right? I'll be able to make some kind of money lah. Okay, and then I can do I can do a calendar where I long with a call option in December, and then I do a short leg in November. I can still capture some kind of credit in November lah, which allow me to get a shitload of credit in November lah. Okay. On top of that, if I'm able to add toast into it, into toast short leg into December, that's great. And another thing that you can see here is January is all filled with call options, all long leg. And you can see here there's $10,000 risk, $10,000 risk in January lah, okay? And there are no put option as well. So what I can do is I can actually think of a bearish position. I can add that bearish put option into January, and that will sort of give me some kind of a long shot in January as well. it will balance out January. And then for the short leg, I can put that short leg in December. So what I will have is a January December calendar, and that will add more credit into December. Okay, and what that will create is that now I have sufficient credit in December ready to offset any kind of risk from my long options. At the same time, if I add another long trade, a bullish trade into December, right? The December will also be properly hedged in terms of bearish position versus bullish position. And at the same time, I will also be able to maintain or sort of prepare my January in advance lah. I don't want to like at the end of December then scramble to deal with January lah. Okay, I'll be very much covered for January as well. So in order to do this, what I may need to end up doing is that I may need to get rid of TLT. So maybe can TLT go up? Yes, it can. It can go up. I may miss the trade. So if you are scared about that, you can actually reduce the position by half, get rid of 4,000 shares here, get rid of 2,000 shares here, and then I will have successfully managed to reduce the risk by half lah. Okay, and then I can do all the stuff that I mentioned earlier. My December will be very much well managed already, and at the same time, my January is somewhat taken care of already also. Okay, so now from a copy trader perspective, when I put up a notice that says I am going to exit TLT, what's going to happen? A lot of questions will start to come in. TLT can still go up. What's the reason why you cut TLT? What? How come you exit TLT? And then after that TLT rally, like then they will be like, yeah, shouldn't have follow lah, shouldn't have cut lah, should have diamond hand lah, and then they end up making a lot of mistakes lah. Okay, so it's very important that when you are dealing with options, right, you are also looking at it on a portfolio level. So I do hope that like this very vague, very raw example that I'm giving here can give you a little bit of insight into why sometimes certain trade actions are being taken. Okay, you can set up a similar table like this for your own portfolio and try to monitor what are the weakness, what are the weak spot, which month you need to sort of pay additional attention to. So normally I will do this like 1 month or maybe 1.5 months before the expiration coming. So if I'm looking to repair December, right, I will try to look at it when I'm in the middle or the beginning of November, okay? Because you don't really want to wait until the end of November and then you start scrambling to put up a trade. You want to prepare in advance. And because, for example, I identified that I need a bullish position in November, and then I need a bearish position in January next year. So that is two trades. So if I do not have trades that are ready to go right now, then I need to start finding trades right now, and that may take about 1 week like that. So you want to be prepared lah, okay? So who don't understand what's going on, who have no idea what I have just been talking for the last 10-20 minutes, like totally lost, or who understand clearly and you are now enlightened? Very clear. Okay, that's good, that's good. Okay, so now speaking of long position in December, we need to long something, and one of our recent graduate actually put up a very good trade report, a firm holding a very informative report, and I do think this is a very good trade to go also. On earnings, right, it actually sorry, this is chemo. I was thinking why the chart like that. Affirm, it actually went up about 11%, and I think the target price, I believe it can be somewhere around $95, okay, which is very close to the previous resistance there. So I think we can do a December long affirm, and then we do a November short leg. So it's a December November calendar, okay? That will give us a long position in December and a short leg in November. And then for January one, I will take some time to look for a short. I don't have any short right now, but January is still a little bit far away lah. Okay, I do have some time to look for a short trade, but don't be surprised if I am exiting TLT on Monday or if I'm cutting TLT lah. Okay, it is simply because there's too much risk that is ongoing here. So do take note of that. But a firm holding that definitely something that we can play. And secondly, right, I'm also looking at a few other stocks. For example, Freshpet. Freshpet currently it kind of dropped like a rock, but there are some changes in the management plan coming in. So management have mentioned that they are no longer concentrating on expansion and aggressive capex, but rather they are going to focus on profitability and profit margin. Okay, so when the earning came out, right, the market kind of responded quite positively. Like it was up about 15% like that. Although from the chart, right, you can't really tell that it's 15% because it has dropped so much. But if I zoom it further, it's up quite a bit. And I do think that this recent change in the management plan is actually good news because their expansion have been done very very aggressively already lah, and in fact they can start focusing on profitability already, and I think going forward it can actually go up probably to about 70-80 dollar like that lah. Okay, and you can see the earning just recently finished also. So for this long position, right, I am not in a rush to enter, mainly because the earning is all the way in 2nd of March, and I will probably will wait for February or March calls lah. Okay, and then after that I will do a short leg in January or something. There's no short leg in January yet because we are still very far away lah. Okay, so now when you are doing this, right, there's no cash secure put there's no cash secure put. Okay, so don't anyhow throw in a cash secure put just to get some premium, and then you end up in a situation like chemo like that, in a very very big loss. So we always want a ratio calendar in this kind of situation. So Freshpad, a firm, and the other one I'm looking at is also Applied Optoelectronic. So this is mainly for AI play lah. Okay, so Applied Electronic is something like Credo like that. So what Credo does is Credo does all the high density data transfer wiring lah. Okay, so it do all the wiring, but what Applied Optoelectronic is a little bit further downstream where they are doing the fiber optics lah. Okay, so once all your wiring is done on your data center, all your racks ready, right, in order to send those stuff up into the cloud server, right, you need the fiber optics lah. Okay, so what Applied Optoelectronic is doing is all the fiber optics. And you can see on Friday it is down by quite a bit, about 19%, but eventually it recovered all the way up to about plus 1.82% lah. Okay, so it is something that we can go long position for also, but once again, right, is very the earning just finished lah. Okay, and the other earnings is like all the way down in 17th February, so still very far away. But at the same time, right, what you do not want to do is you do not want to start putting a lot of January call options now. Okay, when you start putting a lot of January call options, right, later comes January, right, there's a lot of stuff to manage in January already. Okay, so what I'm thinking is I may want to look out for um other trades that we can do February, and by the time we are close to end of December, right, or we are in the middle of December, we can start putting up short legs for January lah. Meaning to say we can start playing February January calendar, or maybe March January calendar, that kind of stuff lah. Okay, so that is basically all I have. Hopefully you get some valuable option management insight. Managing a full option portfolio is very different from a stock portfolio because you are dealing with expiration. But more importantly, option allow you to get a lot of credit to offset your risk, which is something that a stock portfolio cannot do lah. Okay, so that's all I have. Thank you very much, and all the best next week. Bye bye. Have a good night. Enjoy your weekend.